But cash is getting to be pretty interesting. Why?
Well, it's solely a matter of volatility and yield. So if you take front-end fixed income and see what the Fed has done and what they're going to do or seem to be likely to do over the next year or so, you're actually getting a real yield where you haven't for quite a number of years. So cash is actually getting more attractive, not less. Doesn't mean that you should rush into it or have more, but it's a much different scenario than it was, say, 2 or 3 years ago with very negative real yields.
Sure, but what does that mean concretely then to smart money and also to the rest of us, Jason?
Sure, it simply means that short-term fixed income, which used to be something that you were almost guaranteed to lose money on, something that actually you're going to make some money on a real basis, which is to say after inflation.
Yeah,
so
well, I get that
the
part.
Indicators I look at say that the positioning in stocks is pretty strong, and everybody's kind of short bonds and kind of doesn't have a lot of cash. So I'm not sure that there's a lot of cash on the sidelines. I'm not sure I agree with Mr. Fink.
But actually, this week, in fact, we saw some sort of movement in that sense. Demand for short-term notes very, very strong. We saw that 2-year auction on Tuesday, seeing the best big to cover in more than 2 years. Is this a sort of price action that you're talking about?
Yeah, this is starts to be actually a viable asset class, or at least a viable investment decision. So before it was, again, negative real yields. Now you see people saying a 2-year note above 2% with inflation below. That's a positive differential, which it doesn't sound attractive. It's not wonderful, and stocks have been fantastic, but it's actually positive, which is different than the last 5 or plus years.
Yes, but you're not recommending that, or you're not recommending that investors up their allocation to cash or anything like that, right, Jason? So what are you recommending?
Well, look, I think that folks are pretty excited about equity securities globally. I think that the U.S. has seen a tremendous rally, well over and above what you've seen from earnings progression, and that shows up in valuations. The long term would tell you that that's going to be a constrained return environment. So actually, in some of the portfolios that I run, I actually am increasing cash levels. So again, because it's a viable investment, whereas before it was not.